You found out that you need to file a tax return in the US. Now you are contemplating or deciding if you need a US tax professional to help you in those filing, or you can do it yourself by using a DIY tax software. In all honesty, for some people, tax software may be enough. But for US expats, there are specific situations where doing it yourself can cost you far more than the professional fee. In this video, I'll walk you through the circumstances where hiring a US tax professional is not just convenient, it may be the smarter financial decision. Hi, this is Vilma, and I am an IRS enrolled agent. I have been doing cross-border taxation for more than 16 years. In this channel, we'll help U.S. taxpayers overseas understand their U.S. tax obligations in plain English. Please remember, this is for educational purposes only. This presentation is not a tax advice. U.S. citizens and resident aliens are generally taxed on their worldwide income, even when they live outside the United States. The IRS also has separate rules for foreign earned income, foreign tax credits, foreign accounts, and late filing procedures. So today, let's talk about when paying for help may actually protect you from bigger problems later. Number one, do you have foreign income from more than one source? The first situation is when your income is not straightforward. For example, maybe you have Australian salary income, US investment income, foreign rental income, self-employment income, superannuation or pension income, or income from a company, trust, or partnership. This is where tax software can become dangerous. The issue is not just entering the numbers. The issue is knowing how the income should be classified for U.S. tax purposes. A foreign salary may be eligible for the foreign earned income exclusion. Investment income generally is not. Business income may create self-employment tax issues. Rental income may require depreciation calculations under U.S. rules. So, if you have more than a simple wage slip, this is one of the first signs that professional help may be worth it. The second one, you are choosing between the foreign earned income exclusion and the foreign tax credit. Many U.S. expats assume the foreign earned income exclusion is always the best option. But that is not always true. The IRS allows qualifying taxpayers to use Form 2555 to claim the foreign earned income exclusion, and in some cases, a foreign housing exclusion or deduction. But the foreign tax credit can sometimes produce a better long-term result, especially if you live in a high tax country like Australia, New Zealand, the UK, or parts of Europe. Here's the problem. Tax software may ask you questions, but it may not explain the long-term strategy. Using the foreign earned income exclusion can sometimes reduce your ability to claim certain credits. It can also affect how unused foreign tax credits carry forward. So this is not just about this year's refund or tax bill. It's about building the right tax position over time. That is where a tax professional can help you compare the options properly. The third reason, you have foreign bank accounts, investments, or financial assets. This is a big one. If you are a US taxpayer overseas, your local bank accounts may create US reporting obligations even if the accounts are completely normal in the country where you live. The IRS reminds taxpayers abroad that foreign financial accounts may need to be reported even if the accounts do not produce taxable income. These can include ordinary checking accounts, savings accounts, investments accounts, and sometimes accounts where you only have signature authority. And depending on your facts, you may also need to consider Form 8938, foreign trust forms, PFIC reporting, or other international information returns. This is one area where the cost of getting it wrong can be much higher than the actual cost of getting advice. So if you have foreign accounts or investments, especially outside a standard bank account, it is usually worth speaking with someone who understands US international reporting. Number 4 reason, you own foreign mutual funds. Exchange traded funds, otherwise known as ETFs or managed investments. This is one of the most overlooked traps for US expats. Many ordinary investments outside the US can be treated very differently under US tax rules. For example, foreign mutual funds or ETFs may fall under the FBAR rules, passive foreign investment company rules. These rules can be extremely complex, and many general tax software programs are not designed to walk you through them properly. The issue is not just tax. It is also reporting. A taxpayer might think, I only made a small amount of income, but the US reporting obligation can still be significant. So, if you own non-US managed funds, ETFs, investment bonds, or similar foreign investment products, this is a strong reason to get professional advice. Number 5 reason, you are behind on your US tax returns. This is another situation where professional help is usually worth it, is when you have not filed US tax returns for several years. Many US expats are shocked to discover that they still had US filing obligations while living overseas. The good news is that the IRS has streamlined filings compliance procedures for eligible taxpayer whose failure to file was non-willful. These procedures are designed for taxpayers who failed to report foreign financial assets or pay tax because of non-willful conduct. But this is not something you want to guess your way through. You need to know how many years to file, whether FBARs are required, whether you qualify as non-willful, what explanations to provide, and whether streamlined filing is even the correct path. If you are already behind, the goal is not just to file forms. The goal is to come back into compliance properly. This number 6 reason. You have foreign company, trust, partnership, or business structure. If you own or control a foreign company, trust, partnership, or other entity, this is usually not a DIY situation. The US has extensive international information reporting rules, and they are very complex. Depending on your structure, you may be dealing with forms like Form 5471, Form 8865, Form 8858, Form 3520, Forms 3520-A, or other reporting requirements. Even if no U.S. tax is due, the reporting penalties for missing international forms can be severe. This is where many expats get caught. They assume I paid tax in my country, so the US should not care. But US tax compliance is not only about tax payable, it is also about disclosure. So, if you have foreign entities, this is one of the clearest signs that you should not rely only on tax software. Number 7 reason. You are self-employed overseas. If you are self-employed outside the US, your tax situation can become more complicated. You may need to consider Schedule C reporting, foreign earned income treatment, foreign tax credits, deductible expenses, U.S. self-employment tax, and whether a totalization agreement applies, and how to get a Social Security employment tax, self-employment tax exemption certificate. This can be especially important for consultants, freelancers, online business owners, coaches, creators, contractors, and digital nomads. The danger is that tax software may calculate something, but it may not help you understand whether the result makes sense. And with self-employment, small classification errors can change the outcome significantly. Number 8 reason. You are married to an non-US spouse. This is another common expat situation. If you are a US citizen married to a non-resident alien spouse, you may have several possible filing options. For example, you may file as married filing separately, or in some cases, make an election to treat your non-US spouse as a US resident for tax purposes. But that election can have serious consequences because it may bring your spouse worldwide income and assets into the US tax system. So this is not just a tax return question. This is a family financial planning question. Before making that election, you need to understand the long-term impact. Number 9 reason. You move countries during the year. If you move from the US to another country or from one foreign country to another, your tax year may involve more than one tax system. You may need to consider part year income, foreign tax paid, timing differences, exchange rates, foreign housing, estate tax residency, and whether you qualify under the bona fide residence test or physical presence test. The IRS notes that the physical presence test generally requires 330 full days in a foreign country or countries during a 12-month period. This is where a small misunderstanding of dates can affect the whole return. If your move was recent, complicated, or involved multiple countries, professional advice can help prevent mistakes. Number 10 reason. You want peace of mind and a long-term strategy. Finally, sometimes the value of a tax professional is not just preparing the return. It is having someone look at the full picture. A good tax professional can help you understand what you need to file, what you do not need to file, which elections matter, which mistakes to avoid, what records to keep, and what planning opportunities may apply in future years. For many expats, the biggest benefit is peace of mind. Not because you cannot learn the rules yourself. You can, but because US expat tax is one of those areas where the consequences of a wrong assumption can be expensive. Now, to be fair, not every US expat needs a tax professional. Tax software may be enough if your situation is very simple. For example, you have one employer, no foreign investments, no foreign entities, no late filings, no complex spouse situation, no rental property, and your foreign account reporting is straightforward. In that case, software may be perfectly fine. But the moment that your situation involves foreign tax credits, foreign entities, non-US investments, late filings, self-employment, or a non-US spouse, it may be worthwhile to get help from a qualified tax professional. So here is the simple rule. If your return is just data entry, software may be enough. But if your return requires judgment, strategy, or international tax knowledge, hiring a professional may be the better option, even with the fee. Because the real question is not how much does the tax professional cost. The better question is, what could this cost me if I get it wrong? If you are a US taxpayer living overseas and you are unsure whether your situation is simple or complex, you can book a consultation with us. Book for a clarity call. Email us at hello@usautax.com and we will be happy to assist you. And if this video helped you, subscribe for more plain English guidance on US tax issues for taxpayers outside the United States. Thank you for joining me. Until the next one.